Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to take a look on the pharmaceutical giants' earnings. The Amgen, which released its first quarter's earnings back in May. We will see how its recently released quarterly report is pointing, whether it is giving us hope of further gains or whether we should be cautious. We will be able to decide after we have gone through the report, and that is our endeavor. If you simply take a glance on the income statement, you will see that there has been substantial revenue growth, but even despite this revenue growth, there has been actual loss in the prior year's earnings for the same quarter, where it was clocking net profit quite close to $3 billion mark. And then you will be perplexed how this is happening when there is this substantial growth, double-digit growth in the top line. Still, in the bottom line, the trading is visible. We will also try to understand these contradiction, and afterwards we will see how things are shaping up on the price front, on the price action front in the markets, to figure out any trading and investing opportunity in days to come, in weeks to come, as well as in months to come. So let us get started. First thing first, that is the fundamental aspect study using this quarterly report. For the quarter ended March 31st, 2024, the total revenues stood at $7.44 billion in comparison a year back. That translates to the growth of almost 20 percentage point in the revenue. Then if you consider the operating expenses have shot up almost 50%, and this is also one factor which explains this lower bottom line, because after being reflected in the income statement, that has dampened this operating income parameter. Apart from this, there is another acquisition, Biogene, which also adversely impacting the income statement for the last quarter. We have these deductibles of interest expenses and other expenses from the operating income because of these acquisition related matters, translating to the net loss of $113 million, in contrast to the $2.8 billion of profit a year back. So that's a turnaround in the negative territory, from making almost 3 billion to making zero or even losing some money. But still, this is now in past, and I feel, considering the growth in the top line, and the blockbuster rise, some of the medicinal products which were launched recently, we can be fairly confident of the ability of the Amgen to get its act in order and grow bottom line as well in coming quarters. That is the hope, that is the expectations of most of the market participants. We have seen the share price rally strongly over last few weeks, and there are good reasons to believe that turnaround in the bottom line is also around the corner, and the upcoming report for the second quarter of 2024 is likely to point northward, with its bottom line also reflecting the changing realities. Than to $5.32 year back. Coming to the balance sheet, we will notice we will be more focused on the operational metrics. For the cash flow statement, we have to continue scrolling. Alright, here is the reconciliation of the cash flow. I think we don't have standalone cash flow statement for it, but still we can read through the data. The net cash provided by the operating activities stood at $689 billion, which is down substantially from the prior period. Then the net cash used in investing activity is also resulting in the cash outflow of $217 million. The cash outflow on account of financing activities stood at $1.708 billion. That is quite a difference from the cash inflow of $21.509 a year back, because last time around the company was raising money for the acquisitions. There was this high inflow, but this time around it is simply resorting to the servicing of debt and paying back earlier money which were raised from the market activities. Overall, the cash position is still sound. Its cash piles stand at $9.7 billion, which is lower by around $1.23 billion from the prior period, but still it is quite a comfortable cushion to have to meet any emergency, exigency, as well as to take advantage. Okay, now we have the net connectivity back. There was slight disruption. Now we get back to our story of the price action of the Amgen. In a recent past, we have seen the Amgen stock rally in a bullish manner. If we go back in time to the mid 2023, it was trading close to the 200 mark, and from there on, it has rallied almost 70 percentage point, 60 to 70 percentage point to trade at US dollar 330 level. It had even touched about 340 in recent sessions, and it is still going strong with the formation of high highs and higher lows in place. I feel the strategy of buy on dips is going to be the most appropriate one to adapt in these circumstances, where we can take advantage of these strong fundamentals and strong technicals in the bullish momentum. We can go for these long trades, long investment with the view that stock in days to come. This candle period is defined as daily, pointing to the medium term timeline. In the medium term, I think the price area to watch out is going to be 100, because that is where the consolidation low was there in the prior consolidation, which unfolded in the month of June. So that range which is going to provide support. If there is any correction from the current levels, then watch out for these price levels, and if it holds, then in course of time we can think about getting involved for a long trade and going in for the rally, which might continue with the next swing high coming beyond 346 or thereabout. So that is the possibility in the medium term. Let us see how things are in the short term as well. In the short term, there has been consolidation after these substantial increase for the first half of July. Last couple of sessions have seen these MJ stock going sideways with underlying momentum still being bullish. And here, the price area to watch out is going to be this immediate swing low of 328, 329. That is the price range which should provide some support for the Amazon stock. And if it drops below that, then we will have to turn cautious. Maybe it will be better to sit on the sidelines for a couple of days before we can make a fresh assessment. But till that happens, we still have the chance of adopting buy on dips approach, and even the current decline from 346 to 333 can be an opportunity, provided that we see how price action unfolds after the start of today's trading session. And if there is no dip below 330, I think we can go for the trade with the expectation of continuation of this bullish momentum. But if there is break below this prior swing low level, then I feel it will be better for us to sit on the sidelines and allow more clarity to emerge in coming sessions. In the long run, where we have used weekly as the candle period, we have same momentum as we had for the short term as well as for the medium term. In the long run as well, the price formation is bullish with these higher highs and higher lows in place. And for last couple of years, the MGN has been continually growing. It is sitting at the very top right now, and in this environment it is going to be a bit difficult for us to look for newer investment investment opportunities because the risk reward ratio is not going to be that favorable. That means I